Fentanyl Dube, your currency trader and currency coach at FX Link. Thank you for joining me on another episode of our Traders Journal, and this week we're looking at a possible shorting opportunity on the pound Canadian. So basically this was a pair that we were looking at this past week, no, a couple of weeks back, pardon me. Last week it was Monday, and the week before it was my opportunity to share my forecast, and we took a look on the pound Canadian. Now the same opportunity is kind of resurfacing itself again. We're looking to add a couple of other extra pips on the same trade again. Now I won't go into much detail about this trade. For anyone who wants to understand why we're looking at, please go to the previous video titled Back to Basics. As like I said, we were looking at the same pair, and in that video we tried to make things a little bit simple for a lot of people to be able to comprehend. So if you want to know more about it, go back to this video. In this video I'll be just touching base and just clarifying things that I didn't make very clear in the first video. Now the first thing we identified was that price action is at a significant structure level. As I could try to my screen, you could see, remember that this was a significant resistance level, or what I like to call a supply level. At this level of structure, this is where we say this is where sellers are most aggressive. And after identifying the price action as at a significant structure level, and this is where we'll be preparing for a selling opportunity, this again we identified our equal measure move, where we said from this A to B, if we could copy and clone this move, this will give us an equal measured move back at this level of structure. And a significant thing that happened on this level of structure, where we have a completion of ABCD pattern. If you could take a closer look, price action doesn't give us a break above, close above this, where we get a completion of the ABCD pattern. Price action is respecting this level and always closes below the end of the D completion. Now going down to the 4 hours, like I said, just to emphasize what we were talking about, price action just keeps respecting this level of structure. And if we could try to grab another tool, this for instance, you can see that although it pushed above the completion of a D leg, but it keeps holding at this level of structure, where price action refuses to break and close above this level of structure. Now another interesting thing about this leg is that, okay, let's try to add this. We have a wedge pattern. If you're familiar with the wedge pattern, if not, don't worry about it. But if you do, you can notice that we have a wedge pattern. And with a wedge pattern, we're expecting to get a breakout between either to get a breakout on the upside or a downside. And whichever way we get a breakout, we will be hoping to continue with that move. Now, we do have a divergence, a bearish divergence on the 4 hour on the daily time frame. Now the only thing that's going to be a little bit different in this episode is that how we'll be looking to have our entries. There are a couple of ways you could be looking to have your entry. Number one, first and most aggressive way that of course it varies from every individual how you prefer to go about it. But the first thing you could do is, I'm pretty sure if you go down to the 15 minutes, there will be, okay, let's just go down to the 15 minutes. Okay, so what I was trying to tell you on the 15 minutes, you could be looking to have a counter trend trade on the downside. Meaning, as you can see, we already have sellers pushing in the market. So, one, you might be looking to get a retest somewhere back of the structure, or you can just be looking to have a continuation back somewhere at this level of structure, no? And this will be you being aggressive, and this will offer a favorable risk to reward. So let's see, for a short position, entry somewhere at this level of structure, or you could just be looking aggressive and hop on the market as soon as markets open. It all depends on your style of trading. And stop loss a few pips just above the wick. There's ugly long wick, just a few pips above that wick. And if you looking for have a retest of structure somewhere back at this level of structure, for a risk of 39 pips, you're already looking at a profit of 66. And you could be looking to hold on until it breaks out of this level of structure, or for safety reasons, one might be looking to not be too greedy and be like, wow, I'm satisfied. Soon as passes this level of structure, I'll be good with my 66 pips and I'll be out of the trade. And this will be specifically for day traders. Now, another way for those swing traders, let's go to the 4 hours, back to the 4 hours. Like I said, there are going to be a number of ways you could be looking to take the trade. Number one, the first one we saw from the 15 minutes, that's another way. But a more conservative way would be to wait for a breakout. First thing that I don't want to be too biased, but I'll be preparing for a short opportunity. So one thing that I might wait to happen, I might wait to get a break below, close below this trend line. And after getting a valid break below, close below, I'll wait for a retest of structure somewhere back into this zone, and this is where I'll be looking to take my short opportunity and hoping to get a continuation back at this level of structure. And this will be a favorable trade where, like I said, this will be a swing trade. So it's going to have more pips, a larger risk and a larger reward, and also take a longer period for it to hit your take profit and all your stop loss. So again, stop loss will just have to be a couple of pips above the wick of these two candles, just a couple of pips above. And as you can see, this all for a take profit back at this retest of structure. Again, this will give you a ratio of 2:3, and for me, this will kind of be the best trade that I could have out of this opportunity if it plays out the way I expect it to play out. Yeah? And scenario number 3, the last scenario, and I won't be particularly taking this trade because I'm not much of a trend continuation trader, but this is how the other opportunity will surface itself or reveal itself, or this is how the other opportunity will work. You could be looking to get a break above, close above. If you could get a valid break above, close above, there's 2 wicks, and at this point you could prepare yourself for a trend continuation, expect price action to return to the structure level, pull back, and you'll be looking to have a buying opportunity. And okay, let's go to the daily. I don't really think of the targets of this. If it does play out this way, again, I didn't really prepare for this side of the trade, but we could still figure something out. So let's look at it. Let's see where do we have the next structure. Okay, so the next structure will be somewhere over here. So after getting that valid break above, close above, looking for a trend continuation on the upside, entries will somewhere be at the retest that we were looking at. Okay, let's go back to the 4 hour to see a proper structure. Okay, entry somewhere at this level, stop loss below this week. Okay, and like you saw, our take profit. Oh, this will offer us a 1:1. Our first take profit will be at this level of structure, so it still won't be a bad trade, as this will offer us a 1:1. Yeah, a 1:1. So these are the this opportunity that I'm looking at. Three type of ways that you could choose to go about it, but I'll be particularly preparing for a short opportunity, but not to be too biased. Just wanted to show that it could even offer a long opportunity if we do get a break above, close above. So I kind of want to make it diverse for a lot of people who are not so familiar with counter trading and are more with trend continuation. Okay, I'm kind of getting out of hand. So if you like this video, just below this video down there's a little red button over there, it's kind of few words written in red. Make sure you click on that and you get weekly updates of market preparations or journals and plenty of other stuff you get for FX Link.